In today's video, I'm going to look at the progress as stocks move down into their intermediate cycle low. This is probably going to turn out to also be a yearly cycle low. So a week or so ago, I noted when stocks marginally broke this trend line that the odds were pretty high that we were going to get, or that stocks had begun an intermediate decline. I've noted before that usually these intermediate declines will unfold as an ABC move. So that is in progress. Here's our A wave down, our B wave bounce. Now we're in the C wave. I would even go so far as to suggest that we're in the bloodbath phase of this intermediate decline. The trend line that was marginally broken here, we've now closed below it. We've also completed a failed daily cycle. So here was our last daily cycle low. More often than not, this doesn't always apply in the stock market because sometimes we'll get a rescue that will stop this before this parameter is met. But in this particular instance, we have gotten it in that the daily cycle will break the previous daily cycle low. So as I said, I think we're in the bloodbath phase. This is the phase where we get that all-out selling panic. We'll start to see completely ridiculous targets being forecast. Always the perma bears will always start calling the end of the bull market when we're into this phase. We'll get the ultimatum levels, such as, if such and such a level is broken, then that of course means that the bull market's over, or that, if this level breaks, then we're going to this level, and none of that means anything. When you get into that final bloodbath phase, all that matters is that you've got traders that are starting to panic, and so they're just selling any and everything. And so support and resistance zones don't really mean a whole lot. Intermediate cycle lows don't typically bottom because they've reached some predetermined support zone. Very often they'll bottom on a trigger event. I'm going to suggest that the trigger event is probably the FOMC meeting next Wednesday. So it's possible we could get another bounce, an up day or two. A bloodbath phase doesn't have to be selling every single day, and as I've said, they usually last 5 to 7 days. I would argue that maybe this is day one right here, when we broke through and closed below that trend line. The bloodbath phase usually starts when some kind of a support zone is broken, and then that kind of is the shock that starts the selling, the panic selling event. I'm going to say that closing below this trend line was probably the recognition that we are in a serious correction. We're starting to develop that into the bull market mentality. I'm starting to see the unrealistic target levels. And so, as I said, I think this was day one. So I think we're 3 days in. The panic phase usually lasts 5 to 7 days. The obvious trigger event would be the FOMC meeting. I don't think it's going to take too much more downside here for the Fed to panic at the next meeting and maybe skew a little bit more dovish on their statement. You can see down here we're embedding RSI in the oversold condition. That is also a sign that you're in the intermediate or the declining phase of the intermediate cycle. I do not think that we're going to have another daily cycle after this. It's been my opinion for a while that this daily cycle would probably only last 2 daily cycles. So let me widen this out a little bit. Here was our last confirmed intermediate cycle low right here. It was pretty mild. And then we've got what was a really, really long intermediate cycle. If I remember correctly, without counting this, I think this ran 31 weeks. Normal is about 20 to 25 on the long side. So we had, let's see, 1, 2, maybe 3 and 4 daily cycles embedded within this intermediate cycle. So I've noted before, a long cycle is often followed by a short cycle, which kind of evens out the larger yearly cycle. This intermediate and yearly cycle low occurred in March. You would expect the next one to occur around 12 months, but it can go for anywhere from 10 to 14 months. I think this one's going to end at the end of this or next week on the FOMC meeting. So I think it's going to be a little bit short. Like I said, this intermediate cycle really long. I expect this one to be a little bit short. So if I remember correctly, we're on week 15. So I would say it's probably going to end next week on week 16. The daily cycle, I believe this was day 31. You know, it's possible for an intermediate or a daily cycle to end a little bit short on day 31, but I think we're going to stretch it out, like I said, into next week. So that it's more in the normal timing band, around 34, 35 days. And then I think that's probably going to be the final intermediate cycle low. And I am expecting, because I expect this year to be really volatile, I'm expecting we're going to have a rip your socks off rocket launch right back up to the all-time highs, and it's going to do it pretty quickly. But then I don't know that we're going to get, you know, any big follow through to the upside. As I've said in previous videos, I think we've run out of time for the parabolic bubble phase. So I think we're pushing that phase of the bull market out maybe many years. As I've said before, the previous secular bull lasted 26 years, and we're only 11, 12 years, 13 years maybe into this bull market right now. So you know, there was a potential that maybe QE was going to speed this bull market up, and we'd get that parabolic blow-off phase earlier than would be expected, but it's starting to look like that's probably not the case, and that this secular bull market is going to run, you know, more normal 20 years or so. So anyway, I think we're still in the wall of worry phase. We're getting the intermediate cycle low where everybody starts to panic, and the perma bears start to call for the end of the bull market, just like they did here, just like they did here, just like they did here, and so on, all the way back to 2009. So bloodbath phase, day 3, probably got into mid next week before we're done. But it should be a buying opportunity, just like all of these intermediate cycle lows are. You have to ignore the perma bears, as they call the end of the bear market, just like they always do at every one of these intermediate and especially yearly cycle lows. The odds are very much against this being a final bull market, secular bull market top. And now it could be a really deep and very scary yearly cycle low. This one certainly was. But as you can see, it was, you know, nowhere near was this the end of the bull market, and I don't think this will be either. So a great buying opportunity coming here soon, probably by mid next week. Now let's take a quick look on how this may affect other assets. We've had a really powerful move in oil. It did come up and marginally break above this peak, which probably means we've got much further to go, but it is getting a little bit long in this daily cycle, and the panic selling into a yearly cycle low can infect other parts of the market as you get margin calls, and then people just start selling any and everything to meet those margin calls. So it's not out of the question that we could get a move into a daily cycle low in energy. But since we already did break out to new highs, the expectation is that once that daily cycle low is finished, then oil's going to come back up and we're going to get a breakout that is sustained and probably going to go to the next resistance zone, which is a little above 90.91. And we might even get to $100 before this larger intermediate cycle is over. And then finally, let's take a look at gold. In my last video, I was predicting and thought that we were going to get a break above this 1835 resistance zone, which would be a preliminary signal that the manipulation of the metals is potentially breaking. We did get that break here. We're not quite out of the woods yet. The cartel is almost certainly going to try and attack gold probably tomorrow and try and drive gold back below this the support and resistance zone. They was a big attack in the miners today to try and set this up. That's why I really don't care for the mining stocks. Not yet, anyway. At some point, I'll be bullish on mining stocks, but right now it's still the preferred asset class for the cartel to attack to try and keep the metals in check. There is a limit, although it's not really enforced, of 3,000 contracts in the futures market. There is no limit to how much you can short. So technically, the cartel is violating the rules of the futures market when they dump 10,000 contracts on the market, and from time to time they do get small fines for manipulating gold, and so they can potentially do the same thing by just attacking the mining stocks without incurring those fines. But as I said, we've got the first indication that maybe the manipulation's about to break, similar to how we had that first indication that stocks were moving down into that intermediate cycle low with that first marginal break of that trend line. So now let's look at silver. Silver a little bit stronger and maybe more of an indication that ultimately the manipulation in the metals is going to break, and that we got some follow through in silver today. Now again, you can almost bet the farm that there's going to be an attack by the cartel tomorrow, especially since it's options expiration. They're going to try and push this back down again. But this follow through is telling me that probably they are going to lose this battle in the metals, and that they may succeed in pushing gold back below that 1835. But I don't think it'll hold, and I think gold will push back through that, and then at some point here the cartel is going to have to cover their shorts or risk losing a lot of money. So look for an attack tomorrow, and they may succeed in pushing gold back below 1835. But I think silver's telling us that ultimately the manipulation in the metals market is going to break in the days and weeks ahead.